Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table. Welcome. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. My name's Seth Krussman, and joined here once again with Dan Mickelin and Benjamin Brayshaw. Hey, how are you guys doing this 2022?
I'm doing great. I'm doing very well.
Optimism abound, you know?
That's the way to be.
That's right.
You know, it's interesting. I was thinking about how many people posted in 2019. Oh, thank goodness 2019's over. Welcome 2020. 3 months into 2020, and you're like, bring back 2019, please.
Rewind.
We're going to do a little bit of looking forward to use, all of our financial planning expertise. If you're just joining Money on Tap for the first time, that's what all three of us do. We're all financial planners and partners at Brayshaw Financial Group. And we get a lot of fun times in what we get to do here with you, which is primarily educational and bringing all of this experience to the table to talk about 7 potential pensions in your life is what we're going to be talking about today.
I really think that this is going to be a popular show for a lot of different reasons because there's a lot of different age brackets all thinking about how they're going to retire. Whether you're 20 years old or you're 60 and you're facing retirement, or you're, working late into your, late 60s or early 70s and you're just trying to figure it all out. You've got different perspectives on income. Depending on your age bracket, how that income comes about is really interesting. We're going to talk a little bit about perspectives on the world of retirement and the different Gen X, millennials, baby boomers, all the different Gen Zs, everything. There's a lot of different perspectives on how they're going to accomplish retirement, and they're all different.
We talk a lot about in this business, benchmarking. Where do you stand relative to your goals at any given point in time? And I think kind of the meat of the conversation today is going to get into that.
But before we jump into the meat of the show, we are going to have Money in the News. First up today, it's probably not unexpected, but we are going to talk about the New Year's resolutions that you're going to make in the financial world. And I think everyone has a couple of them. I think we all walk into the new year thinking to ourselves, you know what, I'm going to balance my checkbook, or I'm going to do this, or I'm going to do that. But we're going to give you a few things today to put on that list. The first thing we're going to talk about is jump-starting your career. There's a lot of people out there that you're saying, hey, I've got this job and this is great. There's a lot of people out there looking for new jobs, and there's a lot of people looking for new employees. We're one of them. But from a job, there's really a lot more than just what the salary is. The idea that, doing something that is within your field, something that you really enjoy, something that's going to bring your life fulfillment and satisfaction. I think that's one thing that we all look for, is really finding purpose in our world. And it doesn't necessarily mean that job or that role is going to change the world and you're going to be an Elon Musk. But the fact that it fills that void of purpose in your life is really, really important. And having meaning and
I think that's another thing that came out of the pandemic experience and the whole work from home notion is I think people got a good look at different ways to have a career and do their job, and it brought to light what some of the other benefits besides the paycheck really mean, and flexible scheduling and the ability to travel and work at the same time. So as you consider your career and the job you're in, if there are things, again, besides just the compensation that you want to improve or add or have be available to you as an employee, now's the time to look at that.
If you are moving on, do yourself a favor and quit in the most professional way. You never know when your path may cross with an ex-boss or whatever you do. Those things will follow you. And I don't know if it comes back in some other way, but it doesn't have to be in the greatest style, but definitely a professional way.
That's for sure. The other thing here that we've got on this list, and this is from a CNN article, CNN Business. This is by Janine Sahadi. Get some life insurance. Protect your family, protect your heirs, protect your whole life. I mean, it's something that a lot of people don't like to talk about. It's not something we all want to think about, but being responsible about that is something that's really, really a focus. It's something we handle here. If you've got questions on life insurance, types of life insurance, what's good, what's suitable for you, you can give us a call. We'd be happy to talk to you about that. Number 3, start your planning for retirement. Now, that's obviously a big focus of what we do. I mean, that is our core realm. We believe that if you're not focused on retirement in all the financial matters that you're doing, you're missing a huge directional piece. It's kind of like picking up a bow and arrow, being blindfolded and saying, hit this target. If you don't have any awareness from the start of the shot to the end of where the shot's going to go, you're never going to make it. The start is just as important as the finish. And, making sure that no matter what age you're at is that you get this thing lined up so that you're at least within the realm of hitting your target is really, really important. And the sooner you do that, the better off you are.
Never too soon to start.
Invest in real estate was in this article. That's an interesting tidbit in today's show. I think that's kind of interesting. And then learn a little bit about digital currency, digital collectibles, whatever. I mean, that's a big wave in our world. I think that it's important for everyone to get aware of what that is around them and how that might be relevant to them. And then finally, get on the same page as your partner. Figure out how you want to handle money and work together well in it. Being cohesive in how you manage money and how you handle money, and that the conversations are healthy and everyone's aware financially of what's going on. Super, super important. That's the New Year's resolution list for you guys today.
All things that we can definitely do and improve our circumstances going forward. No doubt about it.
Absolutely. Absolutely. Next up, Dan, you want to take this one?
Sure. This one is written by Kenneth Kiesnowski. That's from CNBC. Here's where Americans want to travel abroad and where they're losing interest. And, I think the losing interest one is easy to start with, right? That was China. Basically mainland China, Hong Kong, all the kind of satellite peripheral countries there. And whether that's a geopolitical thing or a COVID thing, not quite sure, but I think we can all, probably understand that there's some issues there. And that is fallen firmly on the list here. But it was interesting to see some of the other, most frequently searched destinations here in the top 10. And the first one being Puerto Rico, which, you're easy to travel to, American island out in the Caribbean that, from here on the East Coast, you can get there in 3 hours, which is a really fantastic, beautiful place.
Yeah, I think the thing about travel, and we talked about how each of these articles, and the reason we bring these articles to play, and we were actually joking around about it because some people love the Money in the News better than the show, and then other people hate Money in the News. We laugh about that because we get different reports left and right. But the thing is that the Money in the News is really interesting because it's what we're reading that helps us make investment decisions. So I think we're bringing it to light for people to have some awareness of what's feeding into our brain as interest. It's kind of like, when I hear no one's traveling to China, 75% down in travel and so forth, I'm thinking to myself, well, I'm not buying Shanghai Air. I mean, those are the types of things. But with domestic travel and things like that, there's opportunities inside, whether it's a company providing domestic travel, there's a company, whether it's an airline that's more focused on domestic travel, there might be better opportunity in those spaces. And I think so if I'm giving a recommendation, that would be don't buy Shanghai Air.
Well, what's interesting about it's not just the destinations too; it's how people stay.
Yeah.
Whether you're going the traditional hotel route, so there's obviously opportunities there, or if it's more like an Airbnb thing, which was a hot stock for the year in 2021 here. So, yeah, you're right. I mean, all of these articles, we read them and they're out there for a number of different reasons, but there is always an underlying theme of what's the investment potential in this news that we have in front of us.
Yeah, and I think the other thing about that is that, I think whether it's Airbnb or VBRO or any of these types of that type of staying, or vacationing is getting more awareness. Whether or not it's a good investment and so forth, that's up to whoever the listener is and what you're looking at. But I think that the idea of staying in a hotel potentially with 5,000 other guests is not necessarily on everyone's number one list in the middle of another pandemic scare, if that's what they're going to call it. So that kind of perspective to me leans to the fact of more people, no matter where you are, thinking maybe I just want to stay in a little house by myself somewhere off on the beaten path.
I would be curious to see in that Puerto Rico. I think it's fascinating to find out that is one of the most searched destinations. But it was in 2020 that Hurricane Maria tore through Puerto Rico, and so I'd be really it'd be interesting to see how the recovery has happened then, and then I would assume it's been pretty decent if you have a lot of people looking to make that a destination.
Yeah, and other sites appearing on the list here. We got Cancun, which is easy to get to, kind of central, so that's not a surprise. Some of these other ones are a little bit more kind of far-reaching. You got Bali, Dubai, Bora Bora, and then Panama City coming in at number 5. So
can we just skip to number 9, Toronto? I'm like, warm destination. Heck yeah, gonna go there. And then it's like Toronto.
Right.
Like somebody put Pittsburgh on my list of places. I'm just kidding. I know Toronto's amazing, but that's interesting.
It is actually a very fun city. I've been there a couple times. It's a beautiful place. Great food. Really good food.
Yeah, they are good.
We love Pittsburgh too. So.
Well, finally, for our Money in the News, this is an interesting item, and I think this brings a little bit of history to the closing of 2021 for us. 4 numbers that explain the wild markets in 2021, and I think this brings a perspective of – I was reading this article, and I was saying to myself, there's just so many oddball things that you never expected to have. One of the things – I'm just going to jump right to it – was the number 70. 70 is actually the number of times the S&P hit an all-time high in 2021. That is unbelievable. That sets – so 2021 has more all-time high closes than any year in history.
Yeah, it's incredible. 70 times. And how many trading days are there in a year? I'm trying to do the math in my head. Was it 250? Somewhere in that ballpark, right?
Yeah.
So 70 times out of that.
I can tell you there are 365 days in a year, Dan. That much I know.
Thank you for that.
You're welcome.
Seth's breakdown. Seth, we have Seth handle the hard facts.
I'm an actuary, really. I'm actually an actuary. So
a numbers guy for sure.
I think, and the other thing that I thought was another interesting number was the 100 million number. 100 million is the number of trades per day in the month of January for GameStop.
Which is absolutely wild.
That is absolutely crazy.
That has got to be the craziest stock story of all time. It has to be. It has to be.
It's just absolutely insane. I didn't buy one share of GameStop or sell one share.
No.
You, Seth, you?
No,
Okay.
no, but you made me think of my good buddy George, who it seems like every time I see him, as a matter of fact, he's got a GameStop T-shirt on.
And he's probably a zillionaire.
He's actually also an advisor, which is interesting to me. Then, I'm imagining him sitting down with his clients with the GameStop T-shirt on.
That's a massive compliance issue. It's got to be.
Yeah, that's funny.
Yeah, forget all the retirement conversation. Let's talk about GameStop.
The another number here is 2.2 trillion. That is the amount of dollars. U.S. dollars there are in digital currency currently evaluated, which is just astronomical, the craziness that has happened there. Organizations like MasterCard and so forth have started their adoption of digital currency, and I think that's really what's driven those types of companies adding that as a possibility to do business in, I think is crazy.
That's another story that went from really on nobody's radar almost anywhere to just dominating the news on a daily basis in just a year. It's really incredible.
That's big. Now, 1982. 1982 is the year. It's the last time the consumer prices in America were rising as quickly as it is today.
Yeah. I think most of our listeners remember that too, right?
That's exactly 40 years ago. And we were hitting inflation rates of nearly 5.7%, which is what the government admits, but I'm paying 50% more at the gas pump, so I don't know where their 5.7 comes. So, that's a very crippling thing for a lot of families this year. It's been a crippling thing for a lot of people in a lot of different ways. People that were without jobs for various reasons or health and have been hit. So the struggles behind inflation are something that we realize, and it actually addresses in the article as well that this has been a brutal amount of inflation to struggle with. But that being said, how it's impacted the markets post 1982, that the markets also did inflate for a period of time as well. So that's part of why we're seeing a little bit of I don't know if this is going to be an inflation bubble or if it's going to mount up to a small hill, but it's definitely going to impact our markets one way or another.
Yeah, it's another strong reason to be diversified in what you do. I mean, if you're on a fixed income with no market exposure, this is really a problem.
Yeah.
A couple other highlights from 1982. The cost of gas was 91 cents a gallon. And Michael Jackson's Thriller. That's what was happening.
Just going to go ahead and leave that one there. But
Yep.
More reasons to think I'm glad it was 40 years ago.
All right, that is going to do it for us in Money in the News. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. So, folks, when we come back, we are going to be talking about 7 potential pensions in your life. If what I said there you're not even sure what that means, you definitely want to stick around because these are really important pieces for you in your retirement journey. There's almost no way around the conversation of somehow, some way, trying to create a consistent income for yourself in retirement, and that's the pension story that we're going to be talking about here. Several different ways, right? And can't wait to get into it with you guys. You're listening to Money on Tap. We'll be right back.
Ben, how often do we have somebody come into the office and they don't have a financial plan? And how critical is it for us to put the pieces together and make sure that their future, their retirement, is a successful experience? We talk about it all the time here at Money on Tap. If that's you, give us a call at 855-226-8551 or info@yourmoneyontap.com. Whether you have 100,000, 500,000, 5 million, look, folks, we have the right planner for you. Whether it's Ben or myself, Seth Krussman, we're here for you to get the plan together and make sure that that next step is right.
Now back to Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. Folks, hey, there's not just a podcast here for you or a radio show here for you with Money on Tap. We have seminars. If you are looking to maximize your Social Security strategies or how to minimize taxes through retirement, we have lots and lots of opportunities for you to engage and just not only get connected, have community, but learn about what's important for you in your financial journey, especially when we start talking about retirement, which is what we're talking about today, is 7 potential pensions in your life. So look out, folks. Here it comes.
yeah, and the first one is kind of the most obvious one, right? It's an actual pension, which is becoming a rare and rarer tool these days. But for those of you out there lucky enough to have one, that predictable, regular income is really, a key element to a successful retirement. There's lots of different ways to do that. I think we're going to touch on a bunch of those here today. But again, if you actually have one, it's great to participate, and it's a wonderful benefit, although, kind of diminishing in how often they're out there these days. But there are some concerns that come with that. I know we talked about a couple times here on the show, but some changes in regulation made in the Pension Act that Ben talks to, quite often, and you can probably pick up on that here. But, pension, as good as it is, ain't quite what it used to be.
I think, when we talked about different age brackets of retirement, that person who's in their 60s or 70s and probably a few people in their 50s are still enjoying that first, pension option, which is, having a pension, right? And we talk with so many people who hey, my dad had this great pension and it took care of them during retirement. I wish I had something like that, and I think that's really, it's one of our 7, and some people are fortunate enough to potentially have one of those. There's also a lot of pensions out there that are in jeopardy. That's why pensions are kind of going extinct in the world of corporate businesses. A lot of people have said, and we've talked about this, as you mentioned, Dan, on the show, that companies who either are in the technology world like IBM and things like that, these companies are getting rid of their pensions because they're like, that's not the business we're in, and the liability to that is just so huge. And that's why a lot of these things are non-existent anymore. But as you kind of work down that ladder, I think we're going to start talking about the development of different types of the pensions, because as I had mentioned earlier when we chatted about people in their 20s and 30s, how do you get that pension? How do I get that back? How do I get what my parents had? And I think that's one of the things.
One of the things I would say with that is how things have changed, not only in the pension world, but also in the employment world. How many times do we actually come across or start working with clients that have been working at the same place for 10 years plus even? That's so rare that anybody even stays in that situation, pension or no pension. It's just there's a lot of that happening today.
No, you're right. I think there was a poll done that said that 50% of millennials and Gen Xers said that they couldn't rely on Social Security at all. That just was not even part of their perspective. And, that kind of brings us to, one of our 7 potential pensions for you, and that would be Social Security. The concept that, the government has to pay, and we've had shows on, the likelihood and the validity of when the government's going to pay it, when are they going to run out of money, the claims paying ability, and just all these different parts of it. And there's a lot to be said there. There's a lot of different woes. And, looking at this, being a Gen Xer myself, right? I don't consider Social Security as something in my. I don't know about you guys. We're all Gen Xers, right? We're all exactly the same age, actually. So, so the 3 of us here sitting, going through this, I just don't. When I think of retirement, I do not think of Social Security. Do you, Dan, Seth?
It's no, not a core element of the planning around that. It'd be nice if there's something there. I'm certainly going to take it. But,
you're paying for it right now.
Yeah, no, that's what I think about Social Security is on the way out, not so much on the way in.
Right.
But, reality is it's likely to be there in some form or fashion, but it isn't going to be as meaningful for us as it was for prior generations. It just isn't.
Yeah, agreed. You, Seth?
Yeah, there's just too many unknowns in this world of around the Social Security story. It's always a piece that is there as far as we take a look through the lens to see where pensions potentially could be and what those could look like. So it's always there in that capacity. But then there's the other side of this too, where we try to understand how this world could be different going forward, and I think that's where we're at. We're as far as our generation is, we're a little more clear on that.
Yeah, listen to everyone talk. The word that just popped into mind is reliance, right? For a lot of people, they relied on it. They expected it. It was there, and it was a foundational element of the retirement plan. I think for us, you better be prepared to exist without, and if you get it, it's gravy. But, as many things going on, not so reliable.
Actually, it reminded me of a planning conversation that it's probably more common than I would like to admit, but one of the main ideas that gets presented in some of the conversation is, well, I'm just going to save up this money and I'm going to pay off the house and live off of Social Security.
I know.
That's usually not what both of the couple agree on. That's usually one perspective at the table, and then the other one that's watching their eyes go, no, that's not what I'm envisioning retirement to be. But that seems for one person to be the safest way to manage finances in retirement, where it's just a very different. I think the reality is the opposite. I don't think that is the safest way.
Yeah, people think that paying off properties is usually a great retirement method. People I've worked with, creating income from assets and that pay for your home as rent is usually a financially better move most of the time. But I think we're talking about these two these foundational pension perspectives, right? Pensions and Social Security as being the core elements of where this desire for a pension in retirement comes from. We've learned it. There's a consistent foundational base of income we talk about. So we've come up with 5 additional areas. So, pension might be one, Social Security might be another, but we've got 5 other areas to talk about that are income producing thought processes that play into the realm. And we've researched a number of articles. We've gone through this. We've looked at we have our own stuff. So different pieces. But the first item that we would say is probably the most traditional startup area, and we think it's going to be a big driver. We've talked about this long term, is a dividend portfolio. Just a straight blue chip dividend stock portfolio. We think that with a massive rise in baby boomers, we're going to see more of an attraction to this space. So we think there's going to be actually some growth in this area. But this is something that we've been chatting about a lot with clients, and we have specific portfolios we built on this.
Yeah, and it's another kind of new facet of retirement. Generations before would take that same money and drop it into bonds, most likely, right? Spin off interest, you live off of that, or add that into the retirement mix. But with where interest rates have been at, and this prolonged depression there, and where bond rates stand today, that's probably not advisable. In a lot of circumstances, if you have enough money to put it into bonds today, and that whatever interest spins off is enough to get by, then great. But that's a lot of money.
That's a lot of money, and probably they're going to go down in value as rates go up. And if you don't understand that, you should give us a call.
Yeah, the rate environment is so critical when we think of how to create this income for retirement, and ultimately having an income that's steady, consistent, hopefully growing with or keeping pace with inflation. Huge part of the story around what are we talking about here today. But we also, as you talked about bonds, and how that used to be such an effective way to create that kind of that consistent growing income story. When we were taking a look back at 1982, I just happened to see that the interest rate at that time was around 11.5%. And having an interest rate at 11.5%, and gosh, that meant that CDs were much higher and bonds were paying more. But that inflation piece that is the major story around what we were talking about today in 1982, and having never had this inflation rise at this rate since that point in time, it is not the same place, right? It's clearly not the same time, but the environment around rates is very different today than it was in 1982, which is a big concern in trying to create this income, and the dividend portfolio is definitely one that we've shared this concept many times of how this can be a real critical part in developing, again, that consistent, growing, pacing with inflation story.
I think that's great, Seth. And I think that's a lot of what's going on here, is that people don't understand the dynamics, right? And we're trying to give you guys the information of all the moving parts, how rates work, how bonds play a role, how yield and income. Now, that's not necessarily an investment strategy alone, right? So you're not just going out looking for the highest dividend yield, because, a company can change that yield in a heartbeat, right? So that's a concern. And so some people sometimes, and our number 4 here today is the idea of a diversified portfolio. So if you're joining us, we're talking about 7 potential pension programs you can put into your life, right, or you have in your life available. And a diversified portfolio is pretty standard. A lot of people, they have the 60-40 mix, and if you're familiar with that term, that's like 60% stocks and equity type holdings and 40% bonds. If it's based on the first number that you state, so you're an 80-20 mix. We've created hybrid portfolios we talk to people about where we try to mirror or mimic more of a 60-40 mix, but we've actually put blue chip, high yield value stocks in a place of a portion of the bond. So it gives it more of an 80-20 actual mix. But our goal is really to mimic what a traditional 60-40 would be a little bit better by getting rid of some of the bond holdings and reduce that potential vulnerability that Seth and Dan have spoken to. The difference between this is that this portfolio is not driven to produce direct yield, right? We're not producing a direct dividend off of these holdings traditionally in a diversified portfolio. There probably is a little bit of yield for the most part because there are stocks in there that have dividends. There are bonds in there that have some sort of yield associated with it, but it's not directly correlated. You're looking for more of a growth feature here. Not entirely, but some. Now, this is where we would say that people will put money in there and they'll just take a distribution. You put, $100,000 in and you say, hey, I want, $400 or $500 a month. Just send me a check. And good, bad, or indifferent, I'll just endure it. And, and that brings into lots of theory, lots of mathematics. That's where we go to Seth, the actuary. I'm just kidding. He's not an actuary, folks.
Actually not actuary.
And, but statistically, there's Monte Carlo, and that drives, right, guys, that drives the statistics of, how much you can take out, and never statistically run out of money. Now, it used to be around 5%, right? There was a 90-some-odd% chance. Dan's shaking his head, yes. Yeah, like we laugh about this because these statistics have just keep changing on us constantly. I think Monte Carlo's down to to get a 99% likelihood, it's like 3.2% that you'll never run out of money. I mean, it's significantly low, and that has to do with the volatility. The volatility of the market drives that number low, not the movement up and down of the market. So it's just how much it's moving, how fast it's moving, because we all have...
I think that's an interesting point to really kind of try to...
Yeah, go ahead.
Describing the difference there between volatility, right, and the... How did you say that? Because what you said was really important to note. The difference between volatility and the movement in the market is how rapidly that market is moving up and down versus the
natural
actual
ebb and flow of just kind of ups and downs and swings.
Right.
It's like think of the motion of the ocean versus a turbulent storm, and we've seen a lot of turbulent storms, and that pushes that Monte Carlo down.
Right, but one of the things with that as well is we just were talking about, and tying in some of this money in the news stuff, how we love the money in the news because these are topics that tie into the topic that we have today. Was those highs that we've experienced in this market, 70 highs over this year, more than any other market that we've ever experienced. But within those highs, we've only had 5% pullback this year in the market. Which what is that even? Why is that significant? Well, typically there's three or more pullbacks in the market of 5% or more throughout the year. So with all of that said, we're still talking about a scenario of Monte Carlo, which is a battery of tests, and scenarios that we throw through, pour through the portfolio to see, well, what is the probability that we're going to be able to sustain or still stay retired, not run out of money, right? That's the Monte Carlo. In spite of all of those highs and the lack of pullbacks of 5% and that volatility that Ben was talking about there, which is the fluctuation, how rapidly that market is moving up and down, that number is still lower than what it used to be at that 5%-ish number. So it's even though we're talking about markets that have been doing incredibly well, it's important to have a perspective, I think, here on that diversified portfolio. What's realistic here? Because if you're expecting to pull 5% off of a portfolio over time, we'd love to be able to say that story's works, but it's very different today than it used to be.
Yeah, I know. I think that's hard for people to understand, right? Because they're you're listening here and you're saying, well, I made whatever, what the S&P did, 27% or something this year, or some crazy number.
It should do the same next year, right?
Right. Well, why would I only have to take out 3, 4, or 5%? I mean, 27%. Like these kind of. It just doesn't work that way. And we talk about compounded loss, like when the market goes down and you're taking out your principal, and it starts hitting you. It's really about the sequence of market returns. And we have a video on that. And if you don't understand that process, our video on our website at brayshawfinancial.com, it is a phenomenal video. I mean, I show it to people and they watch it 3 or 4 times and they're like, so these people retired 3 years apart and they literally had the exact same money, took out the same things, and one person was worthless in 22 years. The other person had millions and millions of dollars. Like, yeah, that's exactly how it works. That's what makes retirement so complicated and why you need a professional to do it. So number 5, as we're kind of moving forward here, is something that probably a lot of, kind of everyday Americans are familiar with: real estate. I mean, goodness gracious, we have the biggest real estate movement, I think, in history with Airbnb and VBRO, and everyone's a landlord. I mean, everyone's renting out their garage, their apartment, their basement, their attic.
Motorhome.
Yeah, their motorhome that's parked next to their house. I mean, it's literally unbelievable what people are renting out. So everyone is renting real estate, it seems like. Real estate, right? And then, the idea of location. Well, if it's a motorhome next to your house that you're not using, I think that's a good idea, right?
If you're in Portland, trust me, somebody else has already probably acquired your motorhome. and
or burnt it to the ground.
Yeah.
So,
one on every corner.
Well, and Seth's wife, she's heavily in real estate. She knows renting. We've had her on the show a number of times, and it's been great talking about that and kind of valuing that. But I think every American on some level understands the idea of, if I bought a duplex or I bought a place I could rent out, like I could make some money off of that, and somebody else could be paying down my mortgage. And, people become super wealthy, right, Dan? I mean,
it was, my parents' kind of recipe for success, and it was their parents that taught them that. They're not, expert investors or anything like that, but they've done well. But, as soon as they started a family, they bought a 2-family house, rented out one side, lived in the other, and, fast forward 40 years now, it's an extremely valuable piece of property, and it pays for itself. And it's over time, it's just a recipe for success. Simple thing to do, but it's kind of hard to lose if you do it right and if you hold it for a long time.
Yeah. I think the thing is, though, and Seth, I think Kira had mentioned this one time, too, on the show, that just essentially, like, there's people who can do this and there's people who can't, right? There's like, it's not too complicated if you're a little handy, but I think there's times where you're just not the right person to own real estate. And it's okay to be that person, too. So
you got to have that do-it-yourself mentality, yeah.
Yeah, exactly. What's that?
You got to have that do-it-yourself kind of, gumption about repairs and upkeep and maintenance and all that, because otherwise you can get hurt quickly. Pay contractors to do everything, but if you're willing to roll up the sleeves and do some of that, then you can save yourself a ton of money. And
not to mention, like, you could have really bad tenants too, right?
Right.
That could be a bad real quick.
It's always a story that is reality. Like my parents. I remember them getting out of real estate because they just had nightmare stories of renters. And my dad was like, I'm not going to do this anymore. I'm just not, and he decided to invest in different things. And, his investing worked out really well. So there's not one way to do this out here, but definitely the real estate story where there's, an income, a property, an investment that potentially is driving income, I think, at the end of the day is and has a value that can be increasing over time. And you can wrap that in all sorts of, whatever story, which the positive would be, well, they're not making more real estate. Well, okay. That's very true.
And I think we were going to lead right into this, but there's another way to do it where you don't have to be a landlord, and that's REITs, right? So you can own real estate, that produces an income, that collects rent, that's managed elsewhere. Properties you'll never see, never visit, but they can accomplish a lot of the same things, but with none of those responsibilities.
Yeah, diversified. I mean, there's some traded REITs. There's non-traded REITs. There's all sorts of different types of real estate programs out there, and the list goes on beyond that. the idea of real estate is whether you believe in real estate or not, right? So, I mean, but it's a check, it's a cash coming in kind of scenario. And if you do it right, I think the clear piece here is, I mean, I have clients who they just call it mailbox cash. You know, I mean, they've had the properties for, 20, 30 years, they're paid for, and now it's just cash coming in, and the rents go up every year, and they figured it out, and you do get there. It's hard to get there though. It's hard to get there for some people, but if you can stick it out and you can make it work, but even them, I mean, they're worth a good chunk of money. I mean, even they're painting the building themselves. They've gotten into this rhythm. They just do this stuff themselves, and that is the biggest way to make real estate successful on your own. And you're right. I mean, I think traded real estate is a huge opportunity. I think it's still an opportunity in the investment world, because I think a lot of it's still undervalued. A lot of people got out of it, scared of what the pandemic was going to do to it. So I do think there's an investment opportunity in real estate, especially in the traded REIT space. So
when talking about real estate and in all the different forms and fashions of being engaged in it, it's a great story. It's one that's part of so many investors at different times and places, and there's so many different ways to be involved in real estate. And as I was kind of thinking through what you were talking about there, what's your names again? Ben and Dan? Oh, hey, there you are. As I was thinking about that, there's like all these different subcategories of real estate. For instance, office would be one of those. And right now, maybe office might be at a bargain because of pandemic kind of things going on. So there's all sorts of different places and times and kinds of real estate to be investing through. But definitely one of the stories that's prevalent more than not when taking a look at creating a pension. You're listening to Money on Tap. We're going to take a quick break, and we'll be back with more 7 potential pensions for your life. It's one of the coolest shows ever. If you didn't know that, that's where you're at right now in Money on Tap world. We cannot wait to get back. You're listening to us, and you can get a hold of us at 855-226-8551 or info@yourmoneyontap.com. We'll be right back.
If you're listening today and your questions are outside the box of estate planning or financial planning or any number of the pieces that we kind of traditionally talk about, don't forget that Brayshaw Financial offers auto, home, and business insurance. And we have an entire department that handles all of that for you. Give us a call at 855-226-8551 and be happy to take care of those needs for you. Or email us at info@yourmoneyontap.com.
Now back to Money on Tap with Ben, Seth, and Dan.
Welcome back. You're listening to Money on Tap. You can reach us at 855-226-8551 or info@yourmoneyontap.com. And we are talking about 7 potential pensions in your life. And so far, as just a quick recap, we talked about number 1, the no-brainer, pension, right? If there's one of those, that could be a pension. And number 2, Social Security. Then 3, we had dividend portfolio. 4, we had diversified portfolio. 5, we had real estate investing, which will bring us to number 6. But before we get there, it's a good place for us to just mention that if you are interested in learning more about creating your own pension or taxes in retirement or Social Security strategies and planning, we have some workshops, and they're online for you. And you can get a hold of us at info@yourmoneyontap.com or get a hold of us at 855-226-8551 to learn more about what those workshops are that we have available for you to join us on a weekly basis. And it's, a lot of the time, it's a great way to also just build community for, what you're interested in. What are your questions? Who are the people out here that are doing this with you? Really cool stuff there that we've got at Brayshaw Financial Group and Money on Tap. And that is going to get us into number 6, which happens to be The opposite of real estate investing is what I feel like it is.
It is the opposite. That's a good one, Seth. I like that. This came up on some of the searches. It's not something we support. Honestly, I'm just going to say that straight out. I would probably almost never recommend this. I'll share a little bit more about it. But the idea of a reverse mortgage, it's not a pension. It's not a program that we recommend, but it is listed on the sheets that we had looked at and the different research. I would tell you, so reverse mortgage, there's a lot to it. It's basically selling your house back to a bank. It's pretty atrocious. It's pretty much the last thing before you walk out of the house and are impoverished and you have to live on the street kind of decision. Dan and I were talking about it. He's like, have you ever thought that a reverse mortgage would play a role? I honestly never did. I did come across one person who came to me as a referral who was suffering. Out of the thousands and thousands and thousands of people that I've worked with over the years, that I said that, that's probably something you should look into. It's probably the only thing I can think. If you're listening and reverse mortgage is coming up into your income strategies as an option, I think that's something where I would, highly encourage you to call us. I mean, because we will be the best advocate not to do it. And we will look for any other opportunity to get around it. But it is a program that people have used, and it is becoming much, much more used by organizations to market, older people to create income because they're running out of money. I mean, it's just a big fear. It's a big problem. But I also think it's been something that, retired and elderly people have, been targeted.
It's kind of
it's been predatory.
Yes, exactly.
Yeah, it's exactly the right word. So that was number 6. It's not something that we would encourage, but that is out there. But
I feel like we should have some kind of a sound effect that like kicks it to the curb. Do you have a kick it to the curb sound effect over there?
I don't know. I probably do. I'll have to look for it. Crash and burn.
Yeah.
Something from a Bruce Willis movie. But anyways, but number 7, we kind of have a 7/8 scenario because they all kind of tie together. But but number 7, I truly believe this is probably the answer for most people out there, a vast majority, and that's just purchase an annuity. There's people out there that are just annuity salespeople, and that's what they do, and that's how they roll, and that's okay. I mean, that's who they are. From financial planning perspectives that we do, an annuity is a great base to substitute for not having a Social Security check or fearing that. Annuity is a great replacement for a pension that your company doesn't offer. So what is an annuity? Annuity is the idea guarantee to pay. So you're signing up with an insurance company that says, hey, listen, invest with us. We'll invest according to whatever programs that you are choosing at that time, whether it's a securities-based, S&P mirrored or a mutual fund sub-account program or whatever. And they're going to provide some sort of income guarantee, whether it's for a period of, 5 years or a lifetime or for as long as you and your husband or wife are alive. And those things are really great programs for a lot of people who live in fear about creating enough income.
Yeah, I mean, I think the compelling part to it is, in addition to Social Security, in addition to pension, if you're lucky enough to have any of those things or can count on them, the annuity is the only tool left that, we can really speak to that guaranteed word. Mm-hmm. And they've come a long way. They're not what a lot of people perceive them to be, based upon stories they heard maybe 20, 30 years ago. But, in this wrap or in this shell of a financial product that an insurance company provides you, I think it's really just it can't be downplayed, and it's important to note that it'll provide lifetime income for a couple.
Yeah,
husband and wife, doesn't matter who goes first, doesn't matter health circumstances, all those other things in life that come into play, but just guaranteed lifelong income. And there's ways to potentially have it increase, and there's so many different ways to slice it. That meeting with professionals like us, we can sit you down and advise you into which ones may be best suited for your personal circumstance. But it's a wide-ranging field. There's a lot of opportunity there.
I like what you just said there. There's a couple different pieces. I think annuity is getting less of a bad word. It used to have that kind of like swear word in the investment world comparison. I mean, you say the word annuity and everyone ran, but it doesn't have that. I mean, you look at Fidelity, right? And Fidelity has that green line. You ever watch their commercials and they follow the green line? That green line is them selling an annuity. Fidelity has an annuity. For as much as they tout how you should invest in their managed accounts, they have annuities. And every financial firm out there pretty much has an annuity or an annuity channel that you can work with, because people know that pensions are gone, and people know that they don't want to spend their life managing their assets to the day they die. You know, they're going to hire people like us, but at the end of the day, even people like us, they know that the stock market goes up and down and that we're mitigating those losses as best we can. But they want to make sure that they have security and they have some sort of foundation. I mean, goodness gracious, if we didn't believe in foundations here in New England, right, we wouldn't build basements. Right? We would just build a house on a bunch of wood, right? I mean, we build foundations for security. We use concrete, right? We use the word, it's concrete, it's stable, it's sound. That's what people want. They want some sort of base. And I do believe in the core essence of planning. Like, if you're going to sit down with us, like, you're probably going to hear from the three of us, unless you're super wealthy, that, you know, an annuity might play a piece for you. I mean, that's just straight up. Like, I'm zero concern or embarrassment by that. I really do think that there's so much vulnerability in the market, especially now more than ever, that, you know, walking into the market today, I would much rather have locked in, protected, and built around an asset that provides lifetime income and know that I'll partake in the gains of the market, but I won't lose as much in the market's downside.
I think there's one important note that we got to throw in here. Is that it's never for 100% of your money, right? So you can overdo it for sure, and people have gotten that bad advice, and I think that plays into the stigma. So it is just for a portion of your retirement geared assets that you just want to plan on never losing, making sure that they're there to provide that lifelong income. And that's really where we focus in on. And then we have plenty of other instruments and advice we'd offer for the rest of your assets. So, you know, valuable tools, we recommend them, we believe in them, but it's not for all of your money.
Right. And I think
one of the things I was going to add to this is I really like your analogy there of the basement, like people building basements in your New England part of the world. I'm sure there's parts of the world where that's just not an option, but still, it was a good idea then, and it still continues to be a good idea. Just the foundation piece really is where that what was important about that. That is just the piece that we're talking about. Even though, you know, somebody has their story from whenever they got into the wrong idea, the wrong kind of foundation, or they were told that it was going to be, you know, that it was going to solve all of their life's problems, which nothing does, which Ben or Dan, you were just talking about. That's a really important thing to take into consideration, right? And I think there's so many pieces here that people need to try to understand differently or have an open mind around, and how to solve some of the problems for retirement income.
So Seth, real quick, when you say foundation and you're saying, and I'm listening to my own words come out of your mouth and thinking backwards and saying to myself, what are people thinking when we say that, right? And I think the communication piece is, what are the foundations in your life? Is it your mortgage?
Yeah.
Right? Is it your utilities? Is it your, you know, maybe phone bill and heat? Right? I mean, is it your car payment? Like, what are the core items in your life that you need to pay for, and the ones that you feel the most stressed about that you just want to make sure are taken care of? When I think of foundation, I think we take those core expenses and we compare them to an annuity idea that solves those core costs, and then boom, the rest of it, you know, your vacation, your gifts, your Christmas, your whatever it is, whatever, all that extra stuff. Yeah, leave it up to the market. And if you do really, really well, go on a worldwide tour. You know? But that's it. I mean, that's really how I would break it out.
Yeah. I think you're right on. All of those things. I think you're just going to have to come back and listen to more Money on Tap. Or, again, we've got some workshops there for you folks. It's about building retirement income. And it's super, super critical. So many ways to do that and minimize taxes. We could keep going, right? But you're listening to Money on Tap. It has been a great show about 7 potential pensions in your life. Please like us on Facebook or any of the places out there that you have a way to connect with us. It's so critical for you to just start to put some of these things in place and understand them differently.
You can reach us at 855-226-8551 or info@yourmoneyontap.com. You can also find us at Facebook. We're at /3D Investing. We're also on Twitter at BFG_LLC. And as always, you can also find us at yourmoneyontap.com. Thanks for listening. Thanks for liking our podcast. We appreciate you, and we can't wait to make it a great day and a great life with you here at Money on Tap.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.